Over here, pull this one over. Amelia's coming up on deck. And there we go. Guys, good morning. Let me just get the screen up here. View on watch page. Pull that baby over here. Okay. How we doing? Good? Check. Test. Rolling. Good morning, everyone. Ross, Susan. Good crew coming in. All right. So, guys, we'll have a fun session. I've got a good friend on deck here to come in, but as always, we'll get you updated as to what's happening here in the markets. Rick Testa, what's up, my man? I know that name. Long time. I don't want to say follower. How about consumer of our content? He follows no one. All right. So, good morning. All right, guys, we're going to hit it here to start. Futures up just a little bit, up about 0.2%. Gold off the same amount, about 0.12, not much bonds. It's kind of a quiet kind of morning. Hey, Ross, what's up? I'm the guy that introduced you at the Money Show in New York. I remember that well. Very cool, man. What's up? What's up? So, so guys, we have I think a market that's pretty quiet in here. I think there's a lot of decisions being made. We're coming into earnings season. I know we have some ECB action. We'll talk to Amelia about a lot weighing on this market. For me, I think it's kind of a sideways, kind of quiet market. Not too much happening from a wave structure point of view, so we'll talk about that. I'm in the new office. As you guys can tell, I think we're actually going to start working on building the infrastructure, desks and stuff today. I've got the bare bones going, so it's fun. It's awesome going to an office. I got to tell you, it's been about 10 years, so that's good. So much going on, but all is well. So, guys, if you didn't see the free video last night, I'll kind of recap where we see the markets now. It's quite a move that we've seen all the way back towards these old highs. From an Elliott Wave point of view, after all, this is Elliott Wave Wednesday. As I see it, there are two distinct possibilities for now. I am still operating under the idea that we've seen a significant three-way drop in December, coming back, potentially tracing out a three-wave move. Now, those of you who have followed the Elliott Wave principle know if you have three down, three up, that can't be all of the correction, and that leaves one of two possible moves after this push, which is another three, which would begin a triangle, or a flat, which would be much more of a significant decline. So I do see us pushing lower soon. It's just, when is this C wave over? And as you can see, the market is really just kind of, we're getting some back and forth action. We're starting to get ATR starting to move up off the lows. That's the average true range. So this is interesting. As the market's pushing higher, you're starting to see range expansion a little bit, and volatility might not reflect this as well. The expected movement, the VIX is obviously the applied volatility, that's money puts and calls, but I think realized range is actually picking this up a little bit more. So what that means is they're starting to get more back and forth, more jockeying for position to determine what this C wave means. There's a few possibilities, but for now, as I mentioned in the member video last night, we're mostly playing with butterflies here, taking moderate delta exposure, theta positive, trying to move up towards key targets. I don't know. And it took me a long time in the business, and remind me, guys, to ask Amelia this. It took me a long time to not only say I don't know as a trader, but I don't know as somebody who's in the trading spotlight, so to speak. And I'm completely fine saying that. I used to care, but I don't care anymore. I'm not exactly sure what's going on in here. I'm taking the positions fairly lightly. So as I mentioned last night, my main SPX position right now is a butterfly. It's in the 31 maze. I'll show you the risk profile here, and I'll show you how it kind of squares up to the Elliott Wave count. As this is loading up, just know I am an Elliott Wave trader. This is Elliott Wave Wednesdays officially. So we always like to determine kind of what kind of market context we're in, whether we're in a corrective environment or a trending environment. That determines the proper option strategy that you want to use. So looking at the risk profile of the current position, and as you guys know, I trade real capital. I'm fully transparent. It's the only way I choose to do it. I've got a butterfly right now, 2720, 2835, 2900. It's an unbalanced butterfly, meaning the distance from the width of the body of the butterfly differs, right? So I've got more risk on the downside than I do on the upside. I probably won't be in this trade until expiration. Max loss would be 21,000. Max gain is 23,000. I'm trying to collect over the next couple weeks a little bit of elevation in the T line above break even. So if I can get up into this range in here from 2,800 to 2,900 over the next 2 weeks, that's kind of how I think this market is trading, right? If you look at where we are, there's a couple Elliott Wave possibilities. We could be in an ending diagonal. We could be doing 1, 2, about to move up in 3. I don't think that's likely. Or we could be set to move lower as well. There's a few possibilities, and I think at that time it's good to have a position that might make money inside of that range, right? So that's the S&P. We're seeing a pretty good rotation back into tech. I like what some of the Asian markets are doing. FXI showing good strength. EEM showing good strength. The semis have come back fairly well. So we're starting to get a pretty good move into the NASDAQ. Then recently we've seen a pretty good move up in Apple. Apple came up to the 200 mark, acting very, very well here. I'm tracking him on this particular account. Apple's been a standout. We traded up to 200. Begun to back off. A lot of the NASDAQ strength has come from Apple. It's come from Facebook. I'll show you Amazon next. But all good parties must come to an end. And from, again, a combination of wave theory and fib, we have a whole cluster of fib resistance. I think you could look into the 200 to 215 range. So we traded up to 200 and came off fairly sharply. But the path that was left was a good 5-wave move off the low. So Apple is showing an indication to be bought. Facebook, I think, is coming back fairly well. We have a pretty strong pattern over here on the red count. I'm liking this ABC flat correction, and we're showing impulsive qualities. Again, we might need a little bit of a setback here in wave 2, but I do think ultimately Facebook will continue higher. I like that one. Amazon, let's talk about this. This is one that I've been watching for a while. It's the biggest, I'd say the best piece of analysis I've done with no money made in a long time. Coming out of this consolidation, I said, guys, we should move up to about 1880. I didn't put the trade on with our members, but we're here at 1880. I don't know why I didn't trade it. I don't like that Amazon is lagging here. You get a lot of NASDAQ and the S&P are breaking and testing these highs where Amazon's underperforming. But through a combination of fib, up here we've got a big zone of 62 to 88 in Amazon. So watch that one if we get any kind of weakness in the broader market. In terms of bonds, you guys know I covered that position last night in the member video, or the free video, I should say, if you're watching. I'll show you my quick TLT position, and then DM. Yeah, I'll take a look at AMD for you quickly. I do have a TLT butterfly in as well. That's kind of the way I'm trading these markets in here. I've got a 26 April, 123, 125, 126 call fly. I've taken 2/3 of the profit here. I'd like to see the bond market start to move up. Again, I've got an unbalanced fly here. I've got 940 potential risk on the downside, no risk on the upside. Could make 1,060, max profit of 3,000. But looking at the T line here, it's just a bullish trade. It's just a bullish trade. So I want to see bonds continue to move up from a TLT point of view. I've got us in a 4th wave. I'd like to see one more push up in 5 of C. Whatever happens at the higher degree of trend up here, I'm not so concerned if this is 1, 2, or 3, or it's A, B, and C. If we can move up to the 125 mark over the next 1 to 2 weeks, we'll get paid. Okay, if the stock market does sell off, that's why I have that unbalanced look in the TLT, and I'll go up and I'll make money. It's not as much as I could with a pin up there, but that's what we're doing. So in terms of, again, option positions, I'm not doing too much. I have Intel. I've got the TLT trade that I mentioned. A couple of VMCs, long some Apple, like just not doing too much, to be completely straightforward with you, not sugarcoating it at all. Here's the portfolio that we've been watching. AMD's been a good one for us. I believe it or not, I still have some Tesla. Call me crazy. Disney, I can't wait for that one to break out. It's been so much in the news cycle. Disney chart pattern looks great when it finally wants to go. What else? Twilio, still got that in the portfolio. And guys, this is a $100,000 portfolio that I started for just for demonstration purposes. Not active trading, just good stock selection, and we're doing that. I still have a little piece of Boeing, real small piece of Boeing. So whatevs. But guys, I mean, it's kind of the market that we're in. So give me 1 or 2 stocks, and AMD for D, I'm sure I'll take a look at that for you. I don't know. How do you guys feel? Are you guys actively trading in here? Are you just sniping, and is it like shooting fish in a barrel, or am I missing something? Because I kind of feel like I'm just indifferent in here. AMD, this stock, man, when this thing goes, holy bananas. I've talked about this exact chart on CNBC multiple times. I alerted you guys on CNBC to the fact that in August, we were coming up to this channel that goes back to 1999 or 2000. We're coming back to retest. The only way I could see this is a wave 2. So if AMD gets the push through that 20-year channel, I mean, holy bananas. Minimum would be 87. A 1618 would be 354. So we're talking massive percent moves off the lows. I think a channel break would bring you up to 87. And I mean, that'd be amazing. I mean, we're talking a couple years out, but that's how significant this downtrend channel is, AMD. So I hold it in the portfolio. I like it. Twilio is another one. Looking to buy the pullback here in TWLO. It's been a really good performer for us. I talked about it on CNBC quite a bit. Come on, snap in there. Little wave 4 pullback looking good. Looks like we've got some old support here at 111, so TWLO on the move. Yeah, there's crazy. It's just, are they going to compete with Netflix? And the Netflix stock has really dropped off. So, all right. So from there, we talked about bonds. Dollar, I can't wait to get Amelia's take on this. Pick a direction, right? Let me go up to that dollar. 96.65. Okay, triangle, sideways, B wave triangle, potentially resolve higher. The foreign exchange market's been very quiet. Gold has been sideways. And while we're on that commodity track, let's talk about crude. Crude, I do have us moving up here. There is going to be an interesting test in crude oil from 65 to 68. Crude's seen a pretty good move up. I think it's going to have a hard time piercing through 68 unchecked, without a correction that is larger than what we've seen here. So, XLE looks pretty good. The energy ETF XLE has broken from a triangle, which is constructive in the near term, but indicates that it would be a final push in XLE. So let me just pull up the wave count there. There we go. XLE, as I said, I have it as B wave triangle, which means we could have one more little push up in energy. So that might correspond to the crude up into the resistance level that I showed you. So yeah, I'm trading it really, really lightly here, guys. For good or bad. It's just kind of the market we're in. I think we're coming up into earnings. Everyone's kind of taking a break as to what happens. So let's talk trading. Let's work on other things. Let's consider what we're doing here as traders. That's why I love to bring in some talented people on the on the interview here. So here we go. Bringing in Amelia Bourdeau. She is a wonderful person. She's a good friend. We've been working together over 10 years. Look at this resume. I can't even believe she agreed to do this show. She's the founder of Market Compass LLC, Federal Reserve Board in Washington. That was her first job out of school. She was U.S. economist and head of Canada economist at Deutsche Bank, head of North American FX strategy UBS, senior FX hedge fund sales Westpac, and she was a CNBC contributor. We did a show, Money in Motion, together a while ago and a long time ago. I was, of course, doing the technicals, and she was on the desk. If you guys ever saw that show, we had a lot of fun with it. She sent me a clip of let me bring her in here. She sent me a clip of one particular time. Amelia, can you hear me?
Hey, yeah, how are you?
Hey,
everybody.
Welcome.
I'm excited to be here. Thanks for having me on. I appreciate it. Super fun.
Thanks for being here. I was just telling everyone of our. See, the thing with Amelia is she's a diehard Giants fan.
I am.
New York Giants. So we were getting into it on one particular piece of analysis, I think on the Australian dollar and its impact on Canada. So we put a bet out there. If I was right, she had to wear a Dallas Cowboys jersey, which is the nemesis of the New York Giants. And if I was wrong, right, I had to wear a kangaroo suit. Who won that bet? Do you remember?
I don't remember. I actually think it worked out like a tie. I think it didn't go in either direction. And I think that show we were planning on both wearing each outfit. I was gonna wear a Cowboys and we each were gonna wear it.
To bring the mood way down. When we were going to, and people were asking about this for a long time, but to bring the mood way down on the show, do you remember when we were supposed to fulfill that bet? That was I think that was
I do.
It was the Parkland shooting. That was the day.
It was absolutely terrible that day. And I think we knew it was serious, but I think just as the show was starting or prior to the show starting, we were in makeup and everything, more headlines kept coming out and we could really judge just how horrific the extent of it was. But I know when I was on my way to NASDAQ, I had heard about it, but I had no clue at that time, how bad it was.
Yeah. Sorry to bring it down, but I just, that was something we were really looking forward to doing, but obviously that wouldn't have been in good taste. So anyways.
I know.
Back to happy times. So thanks for being on. I just went through your bio. I mean, holy cow, dude, you're a busy girl. I was.
Thanks. I am still now, but in a different way. So
yeah, in a better way. She's come over to our side of the business. She's launched her new business, Market Compass LLC. Congrats on the launch. Yeah. I'm happy to say I was working with you on launch and she was
for sure.
She was. It took you a while, dude. Come on. You're not afraid of anything. You run marathons, but what took so long? I'm like, come on, dude. You got so much talent. You have so much to share with people, so much legitimate experience. What took you so long?
It's just a life transition. So I've been in New York City over 18 years and just everything was kind of changing for me at once across my life. So I just really wanted to figure out exactly what I wanted to do. But most importantly, to do that, I think I needed to just step back and take a break for a while. So I just started training for marathons and I was living out at my beach place and it was good. So now I feel more ready to start this new endeavor after a little mini retirement. Now I'm back.
You totally deserve it. And I just wanted, it's all about the integrity. It's all about transparency. It's all about putting people who have the experience in this position. Because as you know, you and I have spoken about this, anybody with a computer and a webcam can have a trading business. The barrier to entry is extremely low. So I really wanted you in the business. One, because we're friends, you've been doing it forever. And two, you've got such good such good of a resume. So talk about your institutional experience a little bit. Is UBS? What was the most memorable? Was it UBS? Was it Deutsche? Was it what? Talk about your most kind of intense work environment.
Yeah, UBS was my most intense work environment, but prior to that, Deutsche Bank, they were different in different capacities. So Deutsche Bank, I was more at the start of my career, and that was a 2001 recession. So that was a really tumultuous time. We moved, actually, at the time, Deutsche Bank was in Midtown, and right after 9/11 had moved to actual Wall Street. So we were just in the thick of everything down there. And, it was a lot of layoffs. It was just a crazy, difficult time in the markets. I was junior, so I got to stay where they laid off a lot of senior people because they were more expensive. And so for me, that allowed me to rise. Every junior person there rose very quickly up the ranks. They gave us more and more responsibility. They were letting the senior people go. So that was interesting. They did send me all over the world. They repeatedly sent me to Australia, Japan, tours in Asia. So I really got to travel heavily and got involved with, seeing clients across Asia and across Europe. So that was the first time in my career I was able to do that. When I worked at UBS,
let me just ask you, did you enjoy the traveling? Did you enjoy it, or did you kind of not look forward to it?
No, I loved it. I always looked forward to it. It's super when you travel with a bank because, they're paying for you to go to 4-star hotels and around the world in business class. So it's the best way to travel. And not only that, you're arranging your important meetings with top hedge funds in London or, in Paris or, Hong Kong. So it's super cool to have that access. And I think I was, younger and more at the start of my career then. And so I thought, sometimes I'd have to pinch myself, is this real? I'm going around the world talking to these people, but it's not, but there wasn't a downside. You have to be careful and very prepared for these meetings because you're talking to very senior people at these hedge funds. And, hedge fund meetings are always quite contentious, actually. So they'll always have the best person and argue their views back and forth. So you really have to know what's going on, and if a trade's gone bad, you have to talk about that at the meeting too, and why. Right. So,
and you're coming from the sell. You're coming from the sell side. So let me ask you this: you're coming from the sell side, and the hedge funds obviously on the buy side. So you need to become. Right. You need to come prepared. Now let me ask you something. Trading is predominantly a male driven business, I dare to say. There's been a lot of research recently showing that women perhaps are better traders and better analysts because they trade with more of a sound mind and less machismo, and they trade more on I don't even know how to describe this. How did you find any resistance in this very intense male-dominated industry as a female, and did it work for you? Did it work against you? Talk about that a little bit.
It's really based on ability at first, because for trading, you have a number, you have a P&L, you're worth what you're worth at the end of the day. So that comes, but it can only get you so far. That's really important. It's really important throughout your career, but it was really important at the beginning, okay? And then as you move and you progress up, to executive director at these banks, much higher, it becomes much more of a political game, okay? And so, it's global macro and FX trading is a very small world compared to the equity trading desks at these large banks. We're just a fraction of those, but yet we have the biggest, most liquid market in the world. And so the flow that would come through these desks, especially at UBS, there were days we would put through a $1 billion in yen, in a half an hour. So that's big. We saw a giant flow, but the competition from that to get clients, to get those orders is really, really tough. And you're not only competing with Americans when you're here in the US. I was always based on New York trading floors. You're also competing with people from around the world because they hire, people from London, people from Europe, people from Eastern Europe, people from South America. So you're really competing with all those people, and stuff gets it's super competitive as you rise, and traders are being replaced, as everybody knows. They have been for a while now with algorithmic trading, and so they don't need as many humans, actually doing the trading. So there's less FX traders, and that just increased the competition for sure. And so I felt like being a woman.
And yet, so many hedge funds continue to underperform the major indices. But please, I didn't want to interrupt you there. Continue to go on the train of thought.
No, I'm just saying, as a woman, and I saw this across banks. There were very, very few women I worked with, kind of in my career as a whole over the 15-year period. And so, what happens is you start to get left out of meetings as your senior, and you don't really know if it's because you're a woman or, they always give you the excuse. I've been given this excuse many times that like, oh, you're single, or we don't want a woman, at our drink night. Like there was a poker night every week at this certain bank for traders, but they didn't want to invite the women because they didn't want their wives to know, like, another trader who was a woman there and have a problem. So that was always their excuse, but I don't know if that was like, if they really felt that way or they were just trying to keep women out of the meetings. And it wouldn't just happen to me. There were more, especially there were more senior women who were actually like global managing directors especially at some of the bigger banks that were older than me, had longer careers. And I noticed for sure, like they get left out of meetings too. So
interesting. They were threatened. They're threatened.
Happened.
I guarantee you, if you get to know Amelia, I promise she's probably tougher than most of the guys, and she could argue with you. So from your institutional trading experience, really good question here. I just saw this. Susan's a good viewer. We see her quite a bit. Susan W. asks, if you were starting as a new trader today, what would you do differently? And answer that obviously within the context of your institutional trading experience. What wisdom can you impart on today's retail trader who seemingly thinks they're at a disadvantage? What do you say?
I think trading education and some people disagree with me. Paper trading is really a good way to start. I really wouldn't have done anything different. I came from a background, I'm not a technical trader like you. I'm a fundamental trader, macro discretionary. So, and that's how we would trade on the desk as well. I think having a really solid background in macro and a really solid framework of approaching the markets is very important. And then watching the markets all day, every day. I mean, for 15 years, I sat in front of my screens 12 hours a day. I don't want to live that life anymore, but I mean, literally, like, it gives you a really good feel for how these currencies move or how markets are moving, or how if one market moves, it could impact another market. And so, I sat through a really volatile time. It was European banking crisis. It was European recession. It was the Greek crisis. So we've seen, I don't want to say we've seen it all. You never know what's around the bend, but we certainly saw a lot. And I remember being on the desk at UBS at that time, even the most experienced traders who were older than me were like, I've never seen markets like this. You know what I mean? And so what happens when you've never seen markets like that?
Wait,
you really have to rely on all of your skills.
That was 2012, right? European banking crisis was
2011, yeah.
Okay. I thought you were talking about. I thought it was European debt downgrade of 11 and or our debt downgrade, and then what was European crisis 11 and 12? But you're talking about the credit crisis of 08 and 09. Gotcha.
Yeah, and then that went into European banking crisis, which went into Greek crisis, and it was just crazy volatile. I mean, there were some days that, every European countries were always getting downgraded. There was that flash crash. I'm trying to remember what year it was. Do you remember? Wasn't like the S&P or the Dow Jones like limit down at one point?
I think it was 2010.
I have to look up here.
I think it was 2010. But I found that interesting. I find that interesting because I was trading on an FX hedge fund at the time, nowhere near the size. I mean, we would clear through UBS and Barclays and Deutsche and Goldman, and we had lines of credit with them, whatever. When the credit crisis hit and the yen carry unwound, I reverted back to my old school days of just simply day trading. I was day trading listed stocks following the S&P 500 futures, and I was taught this in the 2000 drop, 2001 drop, 2003 drop. As soon as that happened, the S&P futures were overlaid over the dollar yen, a euro yen, and the correlation was like 1-for-1. I was like, I was crushing it. Yeah. So I'm surprised to hear you say that, because it was just like the 2000 drop. Not quite as volatile, but volatile markets falling have happened several times in the last 20 years. So I think that's a key takeaway. So, okay, so there's a few directions I want to go with this. Realize that volatility creates completely different trading conditions, and it can change like this, and you have to be very flexible in your trading style.
We do. We, took our macro time horizons much shorter. At times, like we became intraday traders because we had no choice.
And that's what that was my second question. If you're a global macro trader, it's just a fancy word for watching how correlated markets based on the fundamental definition trade together, and you're just literally watching the two lines trade together. I mean, am I simplifying it too much here when somebody says global macro? I mean, I know you're watching money flows and the fundamental, but you're watching how two supposedly fundamentally correlated markets are in fact operating together. Is that right or wrong? Tell me if I'm wrong.
No, you're right, but you're right that there's an additional couple things. So we watch how the markets are correlated together, what you said. We watch if they're not correlated together, if things are breaking down and you think, why are they breaking? And then we watch event risk, and event risk is really important. It doesn't happen all the time. There's smaller event risk, like U.S. payrolls once a month, for instance. That's a good event risk. But there's huge event risk, like Brexit, for instance. So we look for market disruption. If we can find something that could disrupt markets, we're very interested in that event. So that doesn't mean that we only trade that, but we have to certainly trade other things too. But we look for times when you can do that, because those can make or break. All the famous macro traders, they have usually one or two global events that made their career. Essentially, that made them hundreds of millions of dollars, and all the famous people, like George Soros broke the Bank of England,
Yep. Don't get too far away from this, because you said something really interesting. When vol expands, time frames shrink. On a global macro basis, or even a fundamental basis, which you could arguably say they're related, how do you manage risk? How does the institutional buy side, how do they manage risk? Is it technicals? Is it hedging in other markets? Is it just buying puts on the downside? How do they trade? What can we take away from your experience?
On the sell side, where we're at a trading desk, so we're the institutional bank, we're executing orders on behalf of hedge funds. So we're managing the client orders for the client, but we're also managing, we have to protect the bank. We have to protect our books as well. And so, these trades can come in very fast or get triggered very fast. Like there'll be 1,000 trades in the order book. You know what I'm saying? Like these things happen very quickly. You have to watch big levels very closely. We're always watching a big level, because remember in FX, if you're sitting on a figure or you're sitting around a big Fibonacci level, if it breaks, multiple orders are going to be executed. And so that's when you see speed. Yeah. Also, technical. Also,
and that's where we're going.
We have very strict limits. We have very strict risk limits, and they're not just stops. For instance, like there's standard deviations of how our profit is moving or not moving during a day. So if a currency, for instance, has moved like 2 standard deviations or 1 standard deviation over its normal trading pattern, we're in that position, we have to get out or we have to manage it. So I think retail traders, which makes sense because any institutional trader thinks this way too, we think in terms of stops on our positions, but we also had other more sophisticated risk limits that would tell us, are these currencies 1 or 2 standard deviations or half a deviation away from how they trade normally? And that that puts on a radar screen, we might have to do more management in that position right now in the next hour. It's heating up,
Okay, so for the retail trader, for the people that are on the call, how do they take standard deviation measurement, which they might not have access to? Is there a way that they could manage their risk? Do you recommend that your retail trader places stops based on technical levels? Do you look at standard deviations maybe on top of like Bollinger Bands, or do you look at the option markets to get where deviations might be? Like how does the retail trader manage risk?
I think for the retail trader, probably the easiest thing to do is just be aware of the big technical levels. So I would be aware of the Fibonacci levels for sure, and then you can just look at historically or over the past couple of weeks, like how currencies are moving overnight. Every morning I look when I get up first thing, like how are they moving in London? How have these currencies moved overnight? You pay attention to the one that's moved the most. Like for instance, this morning when I woke up, it was Naki that had just moved the most. So
Really?
Okay, that's on the move this morning. So, you've either missed the trade or you can join in the momentum, but you realize it's moving, you need to watch it. All the currencies were on there were gaining against the dollar this morning. So, from a currency perspective, it's like a risk on day. So to be aware of that too. If a currency has super large gains one day, you can't really expect that to be repeated the following day in general, typically, yeah.
Okay. All right. Perfect. So let's talk about where you think you said Norway was moving overnight. Is that correct?
Yeah, I'm not sure why. It's just because it's a high beta currency and it looked like it was just risk on overnight. I haven't been following it too closely. A lot of people in currency land don't watch Naki or Stocky though, which is Norway and Sweden, and they tend to move a lot. So Norway obviously is correlated with oil prices, is doing better as oil prices are up now. And Sweden is kind of on its back foot because of the growth slowdown in Europe. But those are like my sneaky trades that I watch, kind of like, the very, very short term trades, because nobody pays attention to them. So when they move, you can kind of get in and out.
Are you laughing that I just switched over on charts? Were you impressed how skillful that was, or you're laughing at something else?
Look at this. I love it.
Dollar Norway, we run an FX service as well.
You should look at euro. Look against the euro.
Euro, okay. I could tell you the most money I've made in FX is in dollar Norway. When dollar Norway moves and there's an oil play, it moves. I love trading dollar Norway. All right, so talk to me. So Euro Norway, we have crude oil moving up. I opened the show talking about crude coming up to 365, resistance up into 68. I've got blank charts here. These are not Amelia's charts, so I'm sure hers are prettied up. Talk to me. What time frame? What are you seeing here on Euro Norway from a fundamental or technical point of view?
We have to look at both Euro and Norway, but just be aware, Europe is slowing. We can look at Euro next, but Draghi is in his press conference right now, still speaking. I don't think it's over yet.
I forgot to mention that. Sorry to do that, because I know you love the press conference.
I do, and Mario's my central banker crush. You know how much I love him. So
come on, I was like, he's got nothing.
Mario on this morning. That would have been so fun. Next time, invite Mario, Todd, also.
Dude, I always said when I was trading on the FX fund, I want to have a bottle of Cabernet with Jean-Claude Trichet. Trichet was the man. He's got more style than Draghi will ever have. Anyway, sorry. Please continue. Please continue. So tell me, tell me what to do.
Growth is to the downside. So, that would, argue for Euro Naki to move lower. The timing of it is pretty difficult. You're going to have to time the Euro. I think the easiest way to trade Naki is to look for like a rate meeting that's coming up and trade it that morning. Or, as I said, if you can look early in the morning, like London trading time. So if you're up 4 or 5 a.m. Eastern Standard Time.
I was. My kids were throwing up this morning.
Yeah, your kids could be up and sick. You might be up and we want to go for your run at 5 a.m. before, U.S. data comes out, so you're back well in time. So, if that momentum is going for Naki, I would say jump in on it early in the morning, early in Eastern Standard Time morning, so when Europe is still open.
That's interesting too. So this is an example of a global macro correlation. If Euro Norway is dropping, and this is how I explain it to my new FX traders, if this is dropping, the first one in the currency quote is dropping, which by default means the second one is strengthening. So Amelia was saying.
When it's Norway strengthening, yeah.
So say that again. Say it again.
When that line Euro Naki is heading lower, Norway is strengthening against the euro. Yeah.
There you go. And if crude oil is truly on a bid, and then I'm going to circle this back to the dollar conversation. If dollar's on a decline, obviously commodities pricing U.S. dollars will get a bid. Crude oil's going higher. Norway, I think, was like the 6th largest exporter of natural gas. I don't know where they are of crude, Brent, but that would certainly spell strength for their economy. So is that a good example of global macro meeting technicals? Because it looks like we've got a trend line break, however you draw trend lines.
Yeah, I think that's definitely a good idea for sure. I mean, you have to watch the oil currencies when you're watching oil. So if you're watching Brent crude or you're watching WTI, you definitely want to look at Norway. You definitely want to look at Canada. Those are the oil currencies.
Okay. So for your customers at Market Compass LLC, how do you trade this? What would you tell them to do? Or do you want to say just come to my website and find out?
No, I didn't have any stops in place for this trade yet, but I mean, I like Euro Naki lower for sure. Why don't we pick a target here?
All right.
Why don't we look at it? Pick a target.
So
I think Euro will be weak also, so that's a good for my view. What's this down here? That low over here with that dip towards the
right here.
Yeah, or the one. Yeah, that low.
I'm going to do a little my Fibonacci for you. So just a little 100% net percent distance change there would put you on a 9.47. But what are you asking? What's today's low or this week's low?
Yeah.
9.85. 9.85. Okay. So we didn't talk enough markets. Keep going. What else? Tell me other markets you want to look at.
Just the euro. Euro's been frustrating, but I think it's going to move lower. We're just waiting. You asked me about the dollar index. You had pulled up the dollar index earlier before I came on, and 60% of the dollar index at DXY you're looking at is euro. So when euro moves, really it impacts the DXY. I think traders have wanted euro lower for a while now. It's just been a really frustrating. It's been a really frustrating trade. I think that when the Fed turned more dovish, that stemmed kind of the euro depreciation. But there's significant risk for euro. I think, what's the low we traded? I think 11.75. Yeah, 111.7 is a big level. Then they want to push it to 110. I think we could really see euro lower because the growth is really slowing compared to growth in the United States.
But that's a terrible chart. I mean, there's no conviction on the downside. Realized volatility in FX is in the toilet. What is it going to take? Is it a euro shock, or is it all of a sudden Jerome Powell is ultra hawkish again, and we're on autopilot to hike rates and shrink the balance sheet, or is it a shoe that would finally drop in Europe? What gets this market going? And I'm asking from like help me. When does FX move?
It's tough. We need to certainly watch every single ECB meeting. We need to watch GDP in Germany, especially if we get more disappointing numbers or lower inflation numbers. That will certainly push it lower. A lot of people on the hedge fund side had thought the ECB was really late in responding to the growth slowdown in Europe, and that was a policy error. And why is that? That opinion is important because if they did make a policy error, if they are too late, if they are behind the curve, we should see inflation lower, we should see worse growth numbers, and then that gives kind of clearance for traders to really push this trade lower. But I think a lot of hedge fund people want to see this lower. So,
but aren't central bank authorities typically behind the curve? Aren't they expected to be late in response, or more so in Europe?
I don't think so. I think that the growth slowdown, I think most people think in the hedge fund world that the growth slowdown in Europe was really apparent, and the ECB was kind of in denial. They had kind of kept alluding over and over and over again that they were going to hike this summer, and everybody was like, no way. And so finally, the last ECB meeting, they capitulated that view. They introduced an LTRO, which is a liquidity swap, which they hadn't done since 2016. So that's an easing measure, and the currency responded to that about a month ago.
Excellent.
Draghi was just talking, and he's saying that growth risks are still to the downside. So any disappointing number you get out of Germany or France in terms of like GDP or inflation will be important.
All right, that's a good takeaway.
They also have the European parliamentary elections coming up in May, and so that's a little bit tough too. There's just a lot of political uncertainty in Europe between, Brexit and the parliamentary elections in Europe because they have some populist parties who are anti-Euro.
Okay.
That doesn't help Euro.
So talk to me about this quickly. The U.S. market's open, but I've got too much to ask you. Why is euro dollar down 0.13%, but euro yen is down 0.45%? Are we seeing more euros selling against the yen, and what does that mean?
I just think the crosses can move a little more than the pairs. The pairs are against the dollar. The crosses are against a non-dollar currency. So people love to push. People love to push yen anytime there's a risk off in any economy. So Draghi was speaking this morning. I'm not entirely sure everything he said, but I know he said that growth was disappointing, and so that gives safe haven yen some clearance to move. And traders really, when they talk about safe haven currencies, it's the dollar, it's the yen, a little bit Swiss franc, not as much. People love to push yen, so it's not surprising to me that it's moving a little more.
So is this legit in euro yen from 126 to 118? Wow, in the early 19. What a big move that was.
Was that January?
That was January, yeah.
Yeah, that was like a flash crash we had like a flash crash in Asia in January.
Oh,
I'm not sure if that's
right. That's right. I
forgot. There was that flash. I think there was that weird flash crash.
Oh yeah.
Nobody really knew what happened. We're kind of seeing. I talked about this a little bit at the Money Show in one of the panels. If you're trading FX, be really careful late in the trading day, Eastern Standard Time, like New York. So we try not to, even like on the trading desk with huge liquidity, like at banks and hedge funds, we really try to initiate no trades between like 4 to 6, because we want Singapore to be open and that liquidity to come in. Like with all these algos and all these trading, electronic trading now, I think weird things happen between like 4 and 6. So don't initiate trades at that time. We were even executing trades on the desk. If level triggered and we had to execute a trade, we'd be like, we don't want to execute it between, like right before you go home at 4:30. The liquidity conditions are usually so bad at that time because London's closed and Singapore's not open yet. And so obviously we'd have to do it, but we were loathsome to do it,
I actually, sorry to keep going on this. I sat on the FX desk at Gain, and we had a couple retail customers who come in and deal like $20 million in pounds in sterling at like 5 p.m. and it would move the whole market 20 points. And then you guys like UBS or Goldman or Deutsche would call us and be like, Will you get this? Will you shut this guy off, please? And they'd hit it, and then they'd go deal on another platform. They'd literally, a retail guy on a retail platform would move the whole cable market around just on $20.
Yeah, liquidity is bad, and also like if you have to like execute sterling during Asia time zone, like those traders aren't as good at executing sterling because 1, the liquidity isn't there, and 2, they don't watch sterling all day because it's not in their time zone. Just as if you're sitting in New York, like don't ask us for a Taiwan dollar trade. We can do it, but why don't you wait till Singapore opens? The experts, sitting in Asia watch Taiwan live and open their whole day responding to the data, and there's going to be much more liquidity. So
all right, we're running low on time. Tell me about Market Compass LLC. I'll bring the website up here. Talk about the services you provide. I'll show you the nice new shiny website. Right here, there's Amelia, marketcompassllc.com. Talk to me about it.
Yeah, so if you go right to the top right there and hit Get the Guide Now, you'll get a series of 5 videos over the course of like 2 weeks that'll talk about like an intro to global macro. And so you can sign up right there. And that'll also give you any of my updates and my product launches. We haven't launched the product yet, but it's in the works. It's coming. We've been building stuff out. That's awesome. So do that, and you'll be on my distribution list for everything. We're going to start off with some webinars and some trading courses and go from there in terms of a monthly subscription. But right now, our offerings are free, products are coming out, and you want to sign up to get on the notifications about that.
Go get it, guys.
We're going to supply, we're going to focus on FX first, is our first market. So we look for big direction moves. We study event risk, and event risk, can affect other markets. Even if you don't trade foreign exchange, you might want to know about event risk, like earnings coming up and, Brexit deadlines coming up, because that can affect equities, that can affect fixed income.
Absolutely. And FX, when FX gets moving, guys, it really, really gets moving when there's a structural shift in interest rate policy from one central bank relative to another. I mean, it's like turning a big cruise liner around, but once it gets going, it goes in a direction for a while. So it's a wonderful trading market. Check out Amelia at Market Compass LLC. She's a dear friend, and I'm glad to see her in the business. And check her out. Give her a lot of support. Amelia, thanks so much for being on. Would you possibly come back?
Of course.
Awesome.
We have to revisit our Aussie trade from the show. We have to talk about Aussie next time.
Oh, I think we're gonna have some fun. So, yeah, we'll maybe we'll come up with a bet for the next show, next time you're on, and then we'll have to deliver.
All right, we'll do that. All right. Well, thanks so much for your time.
Awesome. See you later, Amelia. Okay, take care.
Have a good day. Bye.
Okay, that was great, guys. So thanks for the engagement with Amelia and the questions. Yeah, she's good. So check it out. We have market open 10 minutes already. S&P. Let's take a look here. S&P cash. Boy, it's quiet. At 0.15%. We saw that euro was a little bit lower. After the ECB comments, gold is quiet. Bonds up a quarter. Not much happening. So, quiet day. Good day for the interview. Guys, be sure if you enjoyed this, hit the like button on the screen here. Let me bring this over. Boom. If you are watching on YouTube, let's go right here. Hit that like button. Hit that thumbs up. Drop a question, comment below. I want to know. Here's question of the week for next week. Talk about, I want to know your best trade ever. What was it? Give me the specifics. If you can include a chart or a link to a chart, I will perhaps feature it on the next YouTube live stream. Also, if you have guests that you guys would like to see, drop them in the comments below, and we'll be on for next week. Okay. Ross says markets are quiet because everyone's watching you. Hey, Terry. Yep. Yeah, no trades for today. As I mentioned, I showed you the SPX TLT positions I'm in. I've got a couple small trades going on in individual equities, but kind of taking it easy. After all of this big show that we just did, I forgot to mention to check us out at tradinganalysis.com. This is where you'll find my team, myself. We're featuring stocks, stock options, currencies, like Amelia. A little bit more technical than Amelia. Amelia is very fundamentally driven and has a lot of institutional experience, and crypto. So check us out at tradinganalysis.com, and we'll see you guys in the next video update. Again, be sure to hit that thumbs up button if you appreciate the show, and we'll catch you guys next week, same time. Take care.